Hey, this is Danielle. Welcome to the free video. So today I'm going to be talking about Dick's Sporting Goods because this company has earnings before the market tomorrow. Now, obviously it's too late to put on a trade prior to earnings, but actually with this setup I've been waiting until after earnings because I want to see how these stocks are going to react and just get into the ones that are going to continue falling. Now, the reason why this one is on my radar is because it's already had a little bit of a haircut. It made a high of $147 a share in September, so it kind of topped out before a lot of other stocks in the market. It did try to make another high in November, but it was not able to do it. And then the most interesting part is that last quarter, when they reported earnings, despite the fact that they had great numbers by all accounts, they gapped down 5% and just continued falling until they eventually broke through the 200 simple. And I mean, this pattern right here is just bad rejection. So now that they got below the 200 simple, they tried to rally going into earnings, and then today just gave it all back, down 9%. I mean, okay, fine, not all of it. There's still a couple more dollars to go. But the moral of the story is this thing is closing at $99.50. It has a $10 expected move on earnings, which means that even if it had a very normal expected move and it traded lower by $10, that would mean that it would break to a new low and it would find levels not seen since all the way back in here, which was going to be last May. So if that does occur, like let's say tomorrow morning, market opens, well actually before market open, they have a report, it's good but not great for whatever reason, investors send the stocks lower, well it's probably going to keep rolling over. And that has been the theme this quarter. Just look at, Netflix, it's just a roll and die situation. Roku, yikes, I think we could actually short that one again. Facebook, I mean, that is just a disaster. So a lot of companies that have been reporting lately have basically just sent investors running for the hills. They break to new lows and keep going. So what I'm suggesting is that tomorrow, watch Dick's, see what it does. If it does break to new lows, it's possible that we can momentum trade it tomorrow, either by buying puts, buying a put butterfly, selling a call credit spread. Conversely, let's say, I'm wrong. Let's say that, their report's fine and they trade up into $110. Well, guess what? That's where all the resistance is. That would be an even better spot to short it than down here. So the only way in which I don't think it's a short would be if I'm, completely mistaken and something like this happens. Like, let's say that actually their report is so amazing and fantastic that we end up instead at $120. I mean, that would be pretty high and it would break up above these areas of resistance. But again, you'd have to see if the momentum continued on like this or not. My bet is that there's just a lot of overhead resistance. I think it's going to be hard for this thing to keep going, and I think there's going to be a post-earnings trade on our hands. Other than that, that's all I have for you. I'm going to be doing a live trading session in my mastery tomorrow, so I'll be checking out this one in addition to some other earnings explosion candidates that I have on my list for this week. So if you want to check it out, go to simplertrading.com/profits. Other than that, hope you have a great rest of your day, and I will see you in the next one.
Hey traders, it's Danielle here with Simpler Trading. Thanks for watching. If you enjoyed this video, be sure to like and comment down below. Also, be sure to subscribe and click the bell icon so you will never miss the latest take from our trading experts. Did you know that we provide real-time trade alerts so that you know exactly what we're doing, exactly when we're doing it? Go to www.simplertrading.com to learn more. Good trading, and we'll see you in the next video.